Ladies and gentlemen, good morning. It is my pleasure to speak to you today at the third CEA International Insurance Conference, and I want to express my gratitude to the CEA for giving me the opportunity to deliver one of the keynote speeches at this conference. I have attended the first two CEA conferences and found them particularly informative and interesting. Therefore, I regret very much that I cannot join you today. However, creative supervisors can always find ways of getting their message delivered. The theme of today's conference is Insurance Reform, Opportunity or Threat? In the next few minutes, I will put this topic in the context of the IAIS agenda and priorities for this and the next few years. I believe it is important to explain the background and motivation for change, since sometimes useful reforms are perceived to be threats just because of miscommunication. Let me start by flagging some of the most important priorities on the IAIS agenda. First of all, the IAIS is closely watching the developments in the insurance industry and the entire financial sector. The main issue in that area is still the implementation of recommendations by the G20 and the FSB, including the debate on financial stability that also affects the insurance industry. Secondly, the IAIS is developing the common framework for the supervision of internationally active insurance groups, also known as COMFRAME. This will affect internationally active insurance groups worldwide. Thirdly, I want to discuss the finalization of the new set of insurance core principles. These new ICPs will constitute a modernized and comprehensive set of core principles of sound insurance regulation and supervision. Let me begin with financial stability issues. Due to the financial crisis, regulation is increasingly focusing on the systemic importance of financial institutions. We have learned from the financial crisis that we live in an interdependent global financial world. We recognized that we could not isolate financial institutions within our own jurisdiction from problems in other jurisdictions. We also recognized that through financial conglomerates, financial markets and financial products, the financial sectors around the world are closely interconnected. These globalized, interlinked financial markets have been providing remarkable benefit to the economy, providing better service and a broader range of products at more reasonable prices. At the same time, due to close interconnectedness, they also possess significant risks. Any problem may quickly spread to wider parts of the world or to different financial sectors with only few barriers. The well-known example, of course, is AIG, where problems were triggered by the unregulated entity of credit derivatives. If systemically important financial institutions fail, the real economy may be negatively affected because of global interconnectedness of the financial system. A problem in the financial system of a single country, or even the failure of a single financial institution, has the potential to create tremendous negative impact on the global economy. As an international response to the financial crisis, the G20 world leaders established the Financial Stability Board, FSB, to promote financial stability. The FSB has been very active so far and has been promoting financial reform to strengthen financial regulation and supervision. In this context, I would particularly like to mention the recommendations for addressing systemically important financial institutions and the recommendations for increasing the intensity and effectiveness of financial supervision, both published at the end of last year. Having said this, can you imagine that the insurance sector will perceive some of those reforms as a threat? Traditionally, systemic risk is regarded as a feature of the banking industry. There is a risk that world leaders and international regulators apply remedies that are suitable for systemic and stability risks in the banking industry to other parts of the financial system, including the insurance industry. That is why it is important that the IAIS is involved in the international political debate on financial stability by actively participating in the FSB. The IAIS takes the position that the insurance sector is susceptible to systemic risks generated in other parts of the financial sector. For core insurance activities, however, there is little evidence of insurance either generating or amplifying systemic risk within the financial system itself or in the real economy. This is because of the fundamentally different role of insurers in the economy as compared to banks. It is important also to note that the stabilization role that the insurance sector typically plays in the economy that may help to limit systemic risk. However, insurers may amplify risk. For example, if life insurers reacting to downturns in equity markets, or where they may disrupt for a period a segment of the real economy through an unexpected withdrawal of capacity. Also, non-regulated entities of financial conglomerates and some specific insurance activities, such as financial guarantee insurance, can generate or amplify systemic risk and may be instrumental to contagion within conglomerates or between sectors. Or in other words, where insurers deviate from the traditional insurance business model, supervisors must monitor such developments very closely. Since interconnectedness has been between the sectors and may increase in the future through products, markets and conglomerates, the IAIS is promoting enhancements to supervision and supervisory processes, combined with stronger risk management and enhanced approaches to resolvability to minimize adverse externalities. This is all reflected in the position statement that the IAIS issued in June 2010. At present, the IAIS is developing its own methodology for the identification of potentially systemically important insurers, which is expected to be ready in September this year. In this respect, it is relevant to mention that the IAIS is promoting cross-sectoral macro-potential monitoring of potential build-up of vulnerabilities and planning to develop measures for national authorities to assess degrees of systemic risk. Furthermore, the IAIS is contributing to the international debate on financial stability in the FSB and other fora, supported by the recently established Financial Stability Committee of the IAIS. Let me now turn to the ComFrame initiative. The Common Framework for the Supervision of Internationally Active Insurance Groups, or ComFrame, will be a comprehensive framework for supervisors to address group-wide activities and risks, and also set grounds for better supervisory cooperation in order to allow for a more integrated and international approach. The IAIS is planning to complete ComFrame by mid-2013. Conceptually, ComFrame is a new, integrated package that aims to provide supervisors with the means to assess and compare internationally active groups around the world through better aligned and more consistent supervisory measures undertaken by home and host supervisors on a multilateral basis. ComFrame will develop methods of operating group-wide supervision of internationally active insurance groups in order to make group-wide supervision for both home and host supervisors more effective and more reflective of actual business practices. ComFrame, as part of providing a modus operandi for the supervision of such groups, will cover the business structure, business mix and business development of the group from the perspective of risk management, quantitative and qualitative requirements, and supervisory cooperation and interaction. The ComFrame plans to define approaches regarding the valuation of assets and liabilities, establishment of technical provisions, definition of assets covering technical provisions, asset liability matching, risk and economic value-based solvency assessment with a total balance sheet approach, determination of capital requirements, requirements on the quality of capital, internal models where applicable, stress tests and scenarios, liquidity requirements, treatment of intra-group transactions, and related methodologies. The CAM frame plans to also define approaches and key perspectives on corporate governance, risk management, the roles of actuaries, internal controls, internal and external audit, investment management processes, and so forth. Incentives for directing groups to better manage and curtail risks will be a key perspective in this context. Specifically for insurance group, it is worth mentioning that CAM frame will be specific, but not rules-based. It will be based on and complement the ICPs. The applicable ICPs will be elaborated in CAM frame with respect to their application to international active insurance groups. CAM frame will also be developed in close collaboration with interested stakeholders, in particular the IAIS observers from the insurance industry. It seems to me that this is a very positive development for insurance groups, since CAM frame will contribute to a global convergence of regulatory and supervisory measures and approaches, and therefore to a level playing field between international insurance groups. I hope you too will see the opportunities that CAM frame will provide. Finally, the ICPs. I just mentioned them, the insurance core principles, and the loyal followers of the IAIS amongst you will no doubt know that the IAIS is at present in the final stage of revising the current insurance core principles. For a proper understanding of the nature of the ICPs, I need to mention the Financial Sector Assessment Program, FSAP, carried out by the IMF and the World Bank since 1999. Undertaking an assessment requires a comprehensive framework of principles for insurance regulation and supervision. For that purpose, the first ICPs were already developed in the year 1997 and then revised in 2003. The present review was considered necessary to reflect the developments since the previous revision and the experience of the IMF and World Bank of past assessments. At this moment, the IAIS is in the final stage of completion of the revision. We hope that the annual general meeting of the IAIS will adopt the new ICPs on 1st of October this year. Our working groups and committees, as well as the IAIS Secretariat, are working hard to achieve this. But what is new? The first thing you will notice is the change in presentation. ICPs will be part of the new framework, which consists of a codification of all principles, standards and guidance in one single document. The ICPs are the highest level in the hierarchy of IAIS supervisory material and form the overall umbrella for all other supervisory material. The ICPs will be the only principles and will prescribe the essential elements that must be present in a supervisory regime in order to promote a sound insurance sector. The standards are linked to specific ICPs and set out key high-level requirements that are fundamental to the implementation of the insurance core principles and should be met to demonstrate observance with the core principles. Subsequently, guidance is added, which is the elaboration of the meaning of a standard and which also provides examples for possible ways to comply with or implement the standard. Also, a reshuffling of ICPs has taken place into a more logical order, together with a joining together and renaming of some of the ICPs. On substance, several ICPs were changed if there was a clear rationale for doing so, such as lessons learned from the financial crisis. Otherwise, it was not intended to reopen the debate on previously agreed issues, specifically on recently adopted standards. Several ICPs have been considerably enhanced, for example, on corporate governance, valuation, capital adequacy and solvency, and enterprise risk management. A rather new ICP is dealing with macro-potential surveillance and its role in insurance supervision. As soon as the new ICPs have been approved, IAIS members will be requested to submit their self-assessments against the revised ECPs, those covering mandates, powers, resources and independence of the supervisory authority and group-wide and consolidated supervision, already by early 2012. The IMF and the World Bank will be able to use the full set of ICPs for their assessments straight away. We believe with the new ICPs, the IAIS has created a comprehensive, modernized and robust framework for insurance regulation and supervision for the benefit of policyholders and market stability. We hope that the insurance sector will recognize the benefits as well and see this review as an opportunity rather than a threat. Ladies and gentlemen, the IAIS is interested to continue the dialogue with the insurance industry and other stakeholders. For this, the perfect gateway is participating in IAIS work as an observer. I wish you a successful conference and I thank you very much for your attention.